April has been incredible. Nvidia just hit a new all-time high, but in this video I'm going to reveal something very important. After dropping to only $160, Nvidia rallied hard, gaining 30% in just 4 weeks. But Nvidia is scheduled to report quarterly financial results in a few weeks, and investors want to know if the stock is a buy before they announce financial results. I'll answer that question in this video, give you my thoughts on the business and the valuation, and I'll also reveal and highlight the big things that investors should be looking out for right now. The last time I covered Nvidia on the channel was March 21st at $170, where I revealed a very bullish indicator and a sign that Nvidia was about to move up. A few days later, it ran 30%. So if you find any value in these videos, then remember to like and subscribe. It really is vital to the channel. And leave a comment. Tell me your thoughts about Nvidia. So first of all, let's take a quick look at the latest news, and then we'll get into the core of this video. In the past few days, Nvidia and Google Cloud have deepened their ties, announcing major advancements at Google Cloud Next in Las Vegas. The headline announcement is the new A5X bare metal instance powered by Nvidia's Vera Rubin, delivering up to 10 times lower cost per token and 10 times higher token throughput per megawatt versus the prior generation, and capable of scaling to nearly 1 million Rubin GPUs across multi-site clusters. On the agentic AI front, Nvidia Nemotron 3 supermodels are available on Gemini Enterprise Agent platform for physical and industrial AI. Nvidia Omniverse and Isaac Sim are available on Google Cloud Marketplace, enabling developers to build digital twins, simulate robotics, and validate robots before real-world deployment. Real-world users include OpenAI, running large-scale ChatGPT inference, CrowdStrike, building cybersecurity AI agents, and Schrödinger, shrinking drug discovery simulations from weeks to hours. In really simple terms, basically, Nvidia and Google Cloud are teaming up to build AI infrastructure that makes AI faster, cheaper, and easier for companies, paving the way for smarter business automation, robotics, and industrial AI at massive scale, while Nvidia was also named Google Cloud's Partner of the Year in 2 categories. Now that is the latest on Nvidia's newsroom. But then I just seen this, which really went under the radar. Nvidia and Google tied data center developers in billion-dollar AI debt rush. According to Bloomberg, a data center developer that recently raised $3.8 billion in junk bond sales for an AI infrastructure tied to Nvidia is back in the market for another $4.5 billion. Capital from the 5-year offering is expected to support efforts to build a 200 megawatt facility in Nevada. Now, when I first seen this, I instantly thought maybe this might be Applied Digital. Another of my favorite stocks that has had an incredible run in April. APLD stock gained about 70% from low to high. But it looks like the facility is being developed entirely by Tract Capital's Fleet Data Centers, so it's nothing to do with APLD. Now, Applied Digital is a stock that I've not covered on the channel for a few weeks, but there is a lot going on, so if you'd like to see an APLD update video, then drop a comment below. Now, moving on to the charts, and this is where it gets really important. We can see here from my last Nvidia video where I was pointing out where exactly I thought the next breakout move would come. And I have to say, I was almost 100% accurate with that. Let me know in the comments if you know of anyone who timed it better than this. Despite Nvidia gaining 30% in 3 weeks, I feel that there is still more room for the stock to move up before earnings in May. So let me explain that. We can see the stock is clearly still in an upward trend, regularly hitting the same levels of support and resistance while maintaining higher highs and higher lows. This trend has been ongoing for almost 2 years. But there is a few key things to note here. We are due an Nvidia breakout move. The stock pretty much went sideways from October to April. It stayed within the trend, but it didn't move up like we would usually expect. The last major breakout was to the downside back in April 2025 after President Trump's tariff announcements. I feel that we are due a breakout to the upside, and there is something very interesting when we look at the RSI. As we enter overbought territory for the first time in 12 months, just look at what happens each time going back as far as 2023. In January 2024, the stock it oversold at about $50, but it didn't drop. It ran all the way to $130. Again, here in 2025 at about $130, it didn't drop. It remained in overbought territory until it ran to about $200. So at today's price of $215, this might be early in the next run, and some analysts think that it could run to over $300. Looking at MarketBeat, we can see that there is 54 Wall Street analysts covering this stock with a consensus price target of $275. However, the lowest price target of $205 is only a few dollars below the current price, while the highest price target is a whopping $400. Amazingly, 52 out of 54 analysts are calling Nvidia a buy. There is no sell ratings and only 2 hold ratings, while all the most recent ratings are either buy or strong buy. When we look at the growth grades and underlying metrics, Nvidia is top of the class with straight A's. It's the same for the profitability metrics and for the momentum metrics. The only area that Nvidia falls down on is the valuation metrics, which I don't fully agree with, and this is always going to be likely after a stock makes such gains so fast. If we compare Nvidia to its peers, we can see that there is a similar story with AMD, Intel, Broadcom, Qualcomm, and Taiwan Semiconductor. All the stocks that are currently right back near their 52 weeks highs are given ratings of D and F, as they are between 100% and 330% above their 52-week lows. Qualcomm is the only one here to have a decent valuation rating, given a C+, basically because it's still 27% below its 52-week high and only 22% above its 52-week low. Let me know your thoughts about this in the comments below. Do you think that any of these stocks deserve the ratings that they have been given here? Like, it doesn't seem to make much sense to me. These are given ratings like F for valuation, yet every single one of these stocks is given an A+ for profitability. Now, I have just made a new community post basically asking which of these stocks do you think has the most upside in 2026? AMD, Intel, Qualcomm, or Nvidia? Now, this was a few minutes ago and there's already a few votes, but I'd really appreciate if you would check this out and just a quick vote to see which of these you think has the most upside. Right now, I just don't see Nvidia showing any signs of slowing down anytime soon. I haven't mentioned their product portfolio in this video, but I have talked about it before. And the way their product portfolio is developing, I think they can rely on even more revenue streams going forward. Nvidia has such a huge addressable market and it's only getting bigger. Precedence Research estimated the global data center market size at $430 billion in 2026, and this is expected to grow to approximately $1.1 trillion by 2035. And we don't have to wait until 2035 to see the impact of Nvidia. It's happening right now. There is a severe shortage in GPUs, which implies pricing tailwinds and sustained demand visibility. Nvidia's GPU availability has collapsed to the lowest level since 2023 to early 2024. To put this into perspective, this is where the stock was the last time we had a shortage like this, so I think this is a very exciting time to hold Nvidia stock. Let me know what you think in the comments, and make sure to check out my latest SoFi video, considering their earnings report is later this week.